Hi, let's have a look at Terra Luna, and let's look not just at chart data, right? Not just at prices. Let's look at DeFi statistics, so how much value is being locked, what are the drivers behind that locked value, so what kind of applications are being used. And let's also look at the Luna token's price relative to its related stablecoin UST. So UST is getting more and more adoption, right? It's a stablecoin that's being backed by Luna. How much market share does UST currently have versus, say, Tether or USDC or DAI? And how are those market share fluctuations relating to the Luna price so that we can maybe get an understanding of where the momentum for the Luna token is, if it makes sense to currently buy Luna. And when I say buy Luna, I mean buying the Luna token for currently $81. So just to give a bit of context, Terra Luna is currently at market rank number 9 with a market cap of approximately 27 billion. And so the Luna ecosystem mainly profits from DeFi, right? From decentralized finance, and that's what you can find here at DeFi Llama. Ethereum, of course, is at number 1, right? Ethereum has the most total value locked, but afterwards comes already Terra Luna. So Binance Smart Chain is below that, Avalanche is below that, Solana as well. And BSC and Solana, they've got a higher market cap actually than Terra Luna has. So that's pretty interesting. And what's also interesting is to look at the development of that total value locked for Terra Luna. This is how it looks like, right? This is exactly the kind of graph you want. Adoption is happening, more and more money is moving into the ecosystem. And so what's driving all of this adoption? It's basically two major applications. It's Anchor and it's Lido. So of those 18 billion roughly, we've got 9 billion in Anchor and 5 in Lido. And here, just for completeness sake, let's also break this up. This is the Anchor development, and the Lido development looks pretty much the same. Both very, very positive. Now, in case you don't know what both of those are, Anchor is basically a savings protocol for UST. UST is the stablecoin that's being backed by Luna. So when you deposit your UST here with Anchor, you can get roughly 20% APY on that. So you've got a stablecoin that returns way more than any traditional savings account. And the risk you're basically taking is, will the UST peg with the US dollar stay intact? So UST is an algorithmically based stablecoin that's different to, for example, Tether, right? Or USDC, where there is a central party that says we've got an equivalent of, say, short-term debt in our treasury, and we only issue the stablecoin according to whatever we have in the treasury, right? That's the way how traditional stablecoins do this. But for UST and the Luna token, this works slightly differently. So there are some mechanics behind this, that when UST gets sold and the price should, in theory, go down, there's value transfer happening between the Luna token holders and the UST holders. So Luna is directly backing up UST. And so this already brings me to my very first point. Currently, the return you get here on UST, it is very, very high. And the question is, will the growth of the Terra Luna ecosystem, right, this impressive growth, will it continue to outpace those 20% per annum? Because that's basically what's required, right? There's some kind of pressure on the Luna price coming from this additional UST issuance, because the UST, it has to be backed by Luna. And so when you issue more and more of this UST, this potentially might put pressure on the Luna price because the value gets transferred from Luna to UST. At least that's how I roughly understand this, right? There's some kind of mechanism happening that incentivizes getting rid of your Luna and buying UST when the UST price goes below $1. So the more UST there is, the more value has to transfer away from the Luna token. Now here we've got the second application, which basically makes up almost all of Luna's DeFi ecosystem, and that's Lido. And Lido is basically a staking platform where you can stake your cryptocurrency. And what's interesting is that Terra Luna's value staked is pretty close to what Ethereum currently has, and it has already overtaken Solana by quite a lot, right? This is quite impressive. This is more than 20 times larger. If we look at the total value locked, right, Solana versus Terra, Terra in total is around double the size in terms of the DeFi ecosystem. If you're wondering what are the total market caps, here is Solana with 46 billion. Here is Terra Luna with 29 billion. So that's kind of interesting, right? Could this indicate that Terra Luna, at least relative to Solana, is undervalued? Of course, there are more things that go into such considerations, but just looking at TLV of DeFi protocols, the Luna token seems to be comparatively cheap. even though it has had already quite a run recently, right? So we will look at the price action right now, and we will not just look at the US dollar chart, right? This is the long-term Terra US dollar chart. We'll also look at Terra Luna relative to competitors. So that's obviously Bitcoin and Ethereum, but Solana might also be a good contender. So let's also look at relative performance to Solana. So this is the US dollar chart, and these are trend lines I've drawn in a prior video. So this seems to be all nice and intact. But the issue always is with US dollar charts, you've got very high correlation, right? So let's, for example, toggle this to say, for example, Ethereum, right? This is Ethereum in US dollars. The peak over here happened at the same time where we have high prices here in Luna. The bottom over here also happened at similar times where we had this in Ethereum. So there is high correlation. And so that's why you actually want to look at relative performance. So how is Terra Luna doing versus other cryptocurrencies? That's Terra Luna versus Bitcoin. And here we might argue that Luna is relatively expensive versus Bitcoin. But when we looked at all the other data, especially versus Solana, maybe this is not necessarily an expression of Solana being very expensive. Maybe this is rather an expression of Bitcoin being relatively cheap. And the reason why I say this is because Bitcoin dominance is historically low. Here, look at this. This is the Bitcoin dominance chart on a very long-term scale. And what we see is that the current Bitcoin dominance, so the fraction of all of crypto being Bitcoin, is currently at 40%. So 40% of all of market cap is locked up in Bitcoin, 60% in anything else. Ethereum, by the way, is around 20%. So we are very low on this historically speaking. At the beginning of last year, Bitcoin was more than 70% of all of crypto. Now it's only around 40. So one might argue that it's simply Bitcoin being cheap, not necessarily Terra Luna being particularly expensive. So in the end, it might be that both Bitcoin and Terra Luna could increase in price. Let's also look at Luna versus Ethereum, and the chart isn't that different. One might also argue that Luna is comparatively expensive here, but again, I think this is simply an expression of Terra Luna still be relatively small in market cap. The Terra Luna dominance is currently at 1.4% roughly. So Ethereum is around 15 times larger. So of course, it's way easier for Terra Luna to grow than it is for Ethereum. It takes way more money to move Ethereum than it takes to move Terra Luna. And so one might simply expect that due to those dynamics, that if Terra Luna stays healthy, that it's very likely to outgrow Ethereum over the long term. It's simply way easier to double 1.4% than to double 20%. Now here's the chart you've been waiting for, and this is Terra Luna versus Solana. A long-term sideways trading range, one might argue, where we've got several floors, maybe around here, and we've also got a few resistances. So that's how one can look at this. And if we reach those all-time heights, then we've still got a potential outperformance versus Solana of 180%, which would then also create a flippening here, right? 180% on top of those 28 billions, that would put Terra Luna at place number 4 or 3 potentially. So quite a bit of room to grow. But one thing I was wondering, because there is this strong coupling with UST, how is actually UST doing? Because a lot of money is flowing into the system, right? And so let's look at stablecoin dominances. Over here, we've got the dominance of Tether. So how much money is being locked up in Tether? Tether is the largest of the stablecoins, and here we are looking at 3.8%. Afterwards comes USDC with 2.2%. We can see sometimes the data here on TradingView does seem to have some issues, but it seems to be roughly right. So USDC is a little bit under half the size of USDT, and then we've got UST. So this is now the algorithmically backed stablecoin of Terra Luna. And there we are looking at 0.5%, which is still the largest of the algorithmically based stablecoins. So DAI is actually already smaller. DAI is at 0.45%. So there is quite a bit of adoption happening. And what I find interesting is maybe this growth here, right? This significant growth where UST more than 5x, right? This is 460%. This is a 5.6x. When all of this UST adoption happened, did this increase here since this point in time actually have impact on the Luna price? Let's look at this. That's around the time here for Luna, and there doesn't seem to be a lot of correlation, right? Luna is rather trending up here. So it's not necessarily clear that a growth of the market cap of UST has direct influence on the Luna price. In theory, it should, but in practice, other factors seem to outweigh this. And what are those other factors? It's probably the overall crypto market, right? It's correlation. As we have seen before, right? The valleys here, they happen at the same time. The rally as well, right? It happens at the same time as to, for example, Ethereum, right? So it's probably the overall market that's still the dominant force. It's not necessarily the mechanism of the backing of UST that drives the prices. So just because people get into stable coins and just because UST gets more adoption doesn't necessarily dictate the Luna price. At least that seems to be the current situation. So what does that mean? The way I interpret this is if we really have a very, very significant crypto winter and the Luna price might go down by, say, I don't know, 90%, 95%. We've seen such crashes with other altcoins in the past, right? Cardano, it went down by, I think, 98% during the last crypto winter. If we see such a crash here in Luna, I'm not sure if the peg of UST to the US dollar can still be sustained. So that's how I would look at this. Right now, everything is green. We are not crashing completely right now, so the peg seems to be safe. And so depositing your money into Anchor for those 20% APY seems to be safe as well. But once we start going down here, right? If that happens, I'm not saying it will, right? But if we get a massive crash at some point in time because all of crypto is going down, maybe it does make sense to take some of that risk off the table. Because 20% per annum, it doesn't get paid for nothing, right? You take on some kind of risk. And my impression is that this risk is basically tied to the value of the Luna token that's backing UST. If you enjoyed this video, you're probably also going to enjoy the premium membership content. So we've got daily market updates on Bitcoin and on Ethereum. We've also got a private chat where you can ask me any questions and also content around technical analysis or things such as portfolio construction. A like on the video would be appreciated as well because that will help the channel grow. Don't forget to subscribe. I publish videos regularly. Last but not least, we've also got a public Telegram channel. We are now 1,600 people. You can find us simply by searching for Bitcoin Strategy Channel within the Telegram app. See you next time. Bye-bye.